Hello. Before we start, what if everything you've been taught about retirement is technically correct, but still leaves you working in decades longer than you planned? Today's guest spent years helping people invest before realizing that the traditional roadmap was not really getting the job done. Welcome back to another episode of the Wealth Clock podcast. I'm Stephen Weinstock. For more than 25 years, I've been investing in real estate, raising capital, operating apartment buildings, making loans, building businesses. On this show, I sit down with operators, founders, investors, entrepreneurs, teachers who are actually doing the work. No theory, no fluff, just real conversations about business, investing, entrepreneurship, and building wealth. This is the Wealth Clock, where top operators, founders, and closers share what really works. Today's guest is Steve Lawson, founder of Unbroken Investing and author of the book Wealth Highway. After spending decades helping people invest, Steve realized that many traditional strategies were not creating financial freedom. That realization led him towards cash flow investing, diversification, and passive income. Before we jump in, I do have a sponsor, Cable. And if you own an apartment building with 20 units plus, all they need to get you extra income is the address and the unit count. And they may be able to get you upfront money from Cablevision, Verizon, Charter, Spectrum, all for putting some flyers towards your tenants. No wiring, no billing, regular cable, TV, internet, and you'll earn some residual income as well. CableNOI.com, Cable NOI, net operating income. It stands for CableNOI.com. Steve, thank you very much for coming on.
Thank you so much for having me. I appreciate it.
All right. Before we start, where are you? Where did you grow up? How'd you get into this?
Yeah, so grew up I'm currently in Indianapolis. I grew up in the state of Indiana, and I got into this. I've always been kind of a numbers nerd, but growing up, we lived below the poverty level till I was a teenager, and so got used to hearing, well, we don't have money for that. We can't do that. The only vacation I knew of as a kid until I was at least a teenager meant driving to another family member's house somewhere. That was the only vacation we ever done. And I like exploring and traveling. You'll see that's one of my passions. And so I realized that the only way to do those things is to have more money. And so I got into investing. And again, being a numbers person, it was just kind of a natural fit. And so, over the years, it's developed. And, what I tell people now is you can't buy happiness, but if you have good cash flow and finances, you can buy the things that bring you joy. And that's really what I try and help people do.
What was your first job you had?
Financial planning right out of college. I had a double major in accounting and finance from the Indiana University School of Business, and I graduated and went right into financial planning.
How has your theory on investing changed over the years?
Drastically. Again, right out of college, when I got into financial planning, I thought that's what you were supposed to do to create wealth. You invest, dollar cost averaging into the market, get a diversified portfolio, index funds, that sort of stuff. And what I realized after 10 years of doing that, and keep in mind, so I'm a little old, Stephen, but keep in mind, this is during the big bull run of the 1990s, and the stock market was just skyrocketing year after year. And then we hit 2001 and 2002, the tech bubble burst, and a lot of people were suddenly at the same spot they were 10 years before when it came to their wealth. They had grown a lot and lost it all. And I realized that's not how you create wealth, how you create financial independence. And I figured there's got to be a better way. And so 2002 is when I made the switch into real estate investing instead of the stock market. So that was one of the big transitions for me, was in 2002. And I got into real estate, which, as you know, is a fantastic way to create wealth.
Yeah. I mean, I've been doing it since 2001. So I'm right here on the Steve Lawson train. Talk to me about cash flow investing. What does that mean? People know real estate. Some people watch HGTV. They flip a house, make $100,000 profit, with 60 days, 90 days of hard work and sweat equity. What is real estate investing? What is cash flow investing? And tell me, was that your first foray into real estate for cash flow? Was it for appreciation? Let's get into that.
Yeah. Well, so initially I was doing flips and short-term cash flow, but not sustainable. And my cash flow mindset really came about much later. It wasn't until about 2018, 19. And at that point, I had 2 kids that were about 5 years from going to college. And I set the goal of how can I pay for their college with nothing but passive cash flow. And then I started diversifying actually outside of real estate into some other areas. And so from 2002 to 2018, real estate was the main thing I did. I did a lot of rentals. I did a lot of flips. But one of the realizations is real estate is not a cash flow heavy investment. Again, I saw a great example the other day. Someone said, well, my property only makes $200 a month net cash flow. Yeah, that's true. But then you add in 3% or 4% per year appreciation on a $200,000 house, and that's another $600 or $700 a month. And you add in your tax deductions, and that's another this mortgage pay down, and that's another this. Next thing you know, your cash flow is $200 a month, but the value from that rental property is over $2,500 a month. And that's what a lot of people seem to miss. And so when I talk about cash flow, that is, I do that mostly with things other than real estate, but real estate is where you create the long-term wealth. And so I show people, if you buy a property, I do a lot of BRRRR strategy. So you buy it, you rehab it, you rent it out, you refinance, and 10 years later, you have $100,000 of equity that you can pull out tax-free. And that's the part that a lot of people miss. They're comparing real estate appreciation to stock market appreciation, and they're not that excited about it. They're not that much of a difference. But when you look at the long term, the tax-free benefits, that's the cash flow that I show people how to create long term.
Yeah, when you say tax-free, in your example, the $100,000 after 10 years, the reason why that's tax-free is because you are typically doing a refinance, and therefore it's a loan, and it's not classified as income. Even though you can do whatever you want with that 100 grand, you could buy a Porsche, you could buy another piece of property. And if you want to sell the property, you could always do, 1031 or some other vehicles to minimize the taxes. So yeah, real estate is great. You mentioned, now this is a real estate focused podcast, but you mentioned some of your cash flow investments are outside of real estate. Do you mind sharing what some of those vehicles are?
Not at all. And you actually touched on the couple of the bigger ones anyway. So one of the real revelations I had over the years was when you invest in things, most people look at things that they're going to put money into, and it's either going to appreciate or they hope it does, like stocks, gold, crypto, things like that. Or they're going to get a fixed return, such as CDs or bonds or something like that. And that's what most people think of as investing, and that's growing what you have. But I talk about two assets that create wealth. And what I mean by that is, one of my first real estate examples was a house that I ended up buying for $4 a month. I was actually buying it from the seller for $804, and I was collecting $800 in rent, but my net cost was $4. And I did that for 5 years. Then it was paid off, and I sold it for $75,000. So my $240 investment became worth $75,000. That's not just a little bit of a growth, that's creating wealth. And so real estate is one of the ways you do that. And the other one is by owning businesses. If you look at the 1,000 wealthiest people in America, every one of them made their wealth by owning a business or by owning real estate. And so I got into helping people invest in businesses that they own, even if somebody else is managing and operating it, just like you would real estate. And so that actually generates a lot more current cash flow than the real estate. So we often do the two in conjunction, where you own a business that's generating amazing current cash flow for you, and you're acquiring real estate that's creating that long-term amazing wealth.
Got it. Now, here I might deviate from you, and this podcast is all about having a discussion. Now,
Yeah.
I've been in real estate 25 years. And what I used to call mailbox money is very different than what I call mailbox money today. And mailbox money, is what it sounds like. And another word for that is passive income. Although passive income, there's a lot of layers to that. Is it literally getting a check in the mail and you have no involvement and no responsibilities? Or is it, something a little more, hands-on, but a lot less than a 9 to 5. So when I ask you about passive income, or when you talk about passive income, are you referring to something as easy as mailbox money? Or is this something that you still have to put time and effort into? And I don't mean, upfront about, vetting the actual deal or whatever the opportunity is. But as far as on a monthly, quarterly, and yearly basis, what do you consider passive income?
Yeah.
Is it?
First of all, great question. And I think a lot of the confusion comes with the fact that when you look at the IRS, they call real estate passive income. But then if you are owning it and you manage it yourself, you're screening tenants, you're finding tenants, you're placing them, you're doing all that, you're doing the maintenance, that's not passive, that's a part-time job. And I think that's what creates a lot of confusion. Is it's not that there's no work involved and it's like, oh, I buy a house and get checks in the mail. No, there's a lot of work to be done. The difference, in my opinion, is whether you choose to do that yourself or you hire a management company. And honestly, I saved money. That's why I saved money early in my career by doing it myself. And I had a revelation one time where I was trying to place a tenant and I was struggling. I dropped the price a little bit, and after 3, 4, 5 months, I still didn't have a tenant. I'm like, man, I'm not cash flowing at all. And so I hired a property management company for that one property, and they found a tenant within 2 to 3 weeks that was paying as much as I was trying to get the first month. In other words, my net after paying the property manager was more than I would have made if I had placed a tenant myself. And then that's when I kind of realized, well, wait a minute. They've got the systems, the processes. They're the expert. Why am I trying to do this? And I started making sure that I was hiring other people to manage all of my properties as well as most of my businesses. So I use that same concept on the businesses where you try and make them as passive as possible. It just depends on what that business is and how it's structured. There are a lot of the ones we do, they take less than an hour a week. It's still your business. You're still involved, but someone else is doing most of the work. So it's not passive necessarily, but it's mostly passive.
What do you say to successful people who have earned, money from their career or business, and they say, I'm fine with the stock market. Yes, maybe I'm not going to buy individual stocks, but, if I just buy, SPY, the S&P 500. Yeah, there's ups and downs. And, if I'm 65 and I need to retire, then, that's one thing. But if I'm 30 and I have a long horizon, maybe the CEOs of these 500 companies are smarter than me. It is a liquid investment. And, depends how you do it. There is some sort of dividend, it's not much. Obviously, you could always buy better stock, different stocks that, provide a cash flow if you want it. And the reason why I bring this up is because in my business, I speak to a lot of investors, people that invest with me. And maybe in the beginning, 15, 20 years ago, it was all about getting everybody to sign the dotted line. And now when I speak to investors, I don't turn down investors, but I don't necessarily steer them into the deal, even though we're speaking about my deal or, whatever it is that I do. And if they have zero experience in real estate and they're really an investor at all in anything, I typically tell them, if I were you, just buy, SPY or, take the top 15 stocks and dollar cost average for the next couple of years. Do you care about cash flow? Maybe buy some stocks with a better dividend, but, you'll sleep at night for the most part. It's pretty liquid. As long as you don't get forced to sell it at a downturn, you should be okay because it will recover. And the investors that I do like are either in tons of other deals, other operators, or, they already have a significant, investment portfolio in the stock market. And, whatever they're going to invest with me is really a small amount for them. And I always tell them, hey, there's no such thing as mailbox money. Yes, you're not responsible to, find the deal, source the deal with the bank, deal with the property management, accounting, etc. But you will have a headspace thinking about this on a regular basis. A lot more headspace thinking about your investment with me for 100,000 than potentially 500,000 in the S&P 500. So over the years I've done a little more, I guess, smarter, or maybe I'm just weeding out some investors that have really given me a lot of heartache over the years. Sometimes you have a small investor who just takes up a lot of your time, and you always have to treat them well, and you have to treat them as if they're, a $2 million investor. But sometimes it's, there's ups and downs. Sometimes, I feel like I'm teaching them, which is great. And sometimes I feel like I'm babysitting them, which is not great. And I've bought out investors who, I just felt that they were uncomfortable or they didn't really understand the risk. And, it's a small amount, and I'll tell them, hey, if you want out, here's a check. Obviously, you're losing out on any of the upside, but here's your check, and either, I'll keep it for myself or I'll replace it with somebody else.
So,
Talk to me about, yeah, I'm sorry. Go ahead, Steve. You want to say something?
I'd like to respond to that because I agree with you completely. And the funny thing is, that's my wife. Had I not come along, she's a pharmacist. She is in a 401k. She maxes that out. She had a financial advisor before she met me. She dollar cost averaged into some funds over there. And if I had not come along, that is all she would ever do. And that's fine. That is what she's comfortable with. And that would have been great. And so I kind of divide people. This is a very general stereotype, inside the box and outside the box. She's just kind of inside the box thinking. So, hey, this is what you do, 401k, little dollar cost averaging into some funds, got an emergency fund. That's it. I'm done. That's all she would be doing. And there's a lot of people like that. And in my opinion, I can't persuade them, oh, no, you should buy businesses, buy real estate, or be a private lender. Those are the three main things that I do. I can't persuade them of that, and that's fine. If they come to that conclusion on their own, happy to help them. But what I've discovered is that when you have some people that are outside the box thinkers, either they've invested in real estate or a business or crypto, or they've done private lending. If they've done one of those four, they're looking at non-traditional things and they're open to other non-traditional things. So that's just my observation, kind of agreeing with what you were saying.
Talk to me. You mentioned the words, sometimes you're a private lender. Talk to me about what that means, and I'll tell you why that interests me. Before you tell me what it means, I recently started a fund, a private credit debt fund, where I'm not a broker. People don't come to me for, fix and flip loans or renovation loans on a 3-family house. However, the broker that they went to that underwrites them and potentially approves them will send out their approved file, their client, they'll send it out to a bunch of private equity firms. And I am one of those private equity firms that gets this file. And then it's up to me if I want to fund this loan. This loan's going to close in, 60 days, 30 days. I'll come to the closing table, wire the money directly to the company or the escrow company, depending on where you're from. And I will have the notes instead of saying JP Morgan or Deutsche Bank on the lien. It'll say my LLC, and I service the loan. I get the interest payments, etc. And for the first time in 25 years, I finally found what I consider as close to mailbox money as possible. Like I said, I own multifamily. I own 1 to 4 assets. I own some small retail and office. And as much autopilot as I try, it still takes up a lot of time, especially since we we do management in-house for our multifamily. Obviously, that takes up a lot of time. It takes up a lot of headspace. And that to me is one of my biggest issues. And I sort of fell into this way of investing I don't want to say by accident, but more of an after focus, and recently turned it into a focus. So you mentioned you do private lending. Tell our audience what that means and what exactly are you doing?
So just to be clear, I have an investing community, and we do private lending within the community. Honestly, I'm more of a borrower than a lender. And the way I look at it is this: people who have money and are getting further along in their life, they are more conservative. They're not looking for the next startup. They're looking for consistent cash flow. And being a private lender is a better fit for them, whereas somebody else may be more aggressive and, hey, I'm borrowing money to do a fix and flip. And so I enjoy the real estate side. I actually borrow from the private lenders more than I loan. And so because I'm using it to fund fix and flips, to fund the BRRRR strategy, a lot of times I'll rehab it, then use a traditional refinance called a DSCR loan to refinance it long term, pay the lender back, and then go do it again. And so I utilize quite a bit of private lending that way. So we work with borrowers that are looking for capital and lenders who want to get a decent return secured by real estate. And so we have both of those within our community. And again, they're both investors. They're just often at different stages in life and have different priorities on what they're trying to get out of their investments.
Tell me about your book. Tell me about your teaching community. Let me hear about it.
Sure. So the book is written as a story. It's a friend of mine driving across country, and he starts asking about some financial issues and challenges that he's been having. And so I spent the entire road trip explaining different concepts of of investing and what works. I talk about what they call the 5 levels of financial freedom. Everybody's on one of those 5 levels. The very bottom, you actually spend more money than you make. That's not good. You got to get off that one as quick as possible. Most people are on level 2 or 3. Some are on 4. Again, in 3 and 4, you've got passive cash flow. At level 4, you've got quite a bit of passive cash flow coming in. That's awesome. And at level 5, you've got all the passive cash flow you'll ever need. You don't have to worry about money again. And so we kind of go through what that means. And then I also talk about that in the community when people join. But the book talks about that. It talks about the formula for wealth creation, and it talks about the 2 best ways of creating wealth, which, as I mentioned, owning real estate and owning a business. And so it's got quite a bit in there and different things, and told in stories. And so it's easy to understand. It's actually done. It's a best-selling book now, so I appreciate the people who have bought the book. But then The community is kind of based on the same concepts. It's the same thing. Where are you on your 5 levels of financial freedom? And it's not how you get from where you are to financially free, because it's like looking at a mountain and saying, man, that's really high up there. It is. Well, don't try and get to the top of the mountain. Let's try to get to that first level. Okay. How do you get, if you're on level 2, how do you get up to level 3? Oh, well, you make this change, you do this. All right, great. You're on 3. How do you get up to level 4? And you break down the journey to financial freedom into easier steps. So that's the concept we use when people join. And then, all right, based on that step, here's what you need to do to take that next step and make that progress.
You mentioned $30,000 per month in passive income. What kind of assets are paying you that income?
Yeah. So, and that was done over a period of less than 5 years. And again, at that point, I had kind of started over. I'd done some things differently, changed my strategies, and had started over with almost nothing and built it up to that $30,000 a month within less than 5 years. Mostly real estate, some business, actually a little bit in the crypto area, and but mostly real estate and business.
Okay, so this is not a crypto podcast, but I mean, I own some, just FOMO, fear of missing out, and I don't own it on wallets and stuff like that. I go to Robinhood or whatever, and I buy some ETF that own some Bitcoin and some of the others. But talk to me about cash flowing from crypto. Do they pay, does Bitcoin pay a dividend? How are we cash flowing from crypto?
So 2 things. There's something that worked for a while that no longer works. Basically, this is several years ago. I was doing what's called DeFi projects, decentralized finance, and did really, really well for a long time, and then did really, really poorly. I no longer do anything like that. It's too risky. But what we do have is the way I invest in crypto now is I follow, as a matter of fact, one of my favorite books, The Richest Man in Babylon. One of the examples in there is they say, only invest in things in which you are an expert or you have a trusted advisor who is. And I kind of made the realization that I know crypto, sort of, kind of mostly, but I'm not an expert. And so I happened to find a private fund and I invested with them. It's been almost 4 years. They have made at least 3% per month, every single month. And so they have a unique method of trading using hedging and things like that to protect. They've never had a down month. Again, the worst month they've ever had was still made 3% per month. And that's they just had their 43rd consecutive profitable month. And so they are experts in crypto and trading. I am not. And so I'm taking advantage of that. And that's how I can get income from crypto. And that was the first one. I've actually joined a second one by a different manager, but that kind of follows a similar concept.
That income specifically, that's regular taxable income? What kind of, how is that classified?
Great question. So I've actually got, they've done so well, I've got 2 different funds with them. One is my normal fund. And so, yes, those are gains, taxable as gains. That's a taxable income. The other one is actually inside my self-directed Roth 401k. So that grows tax deferred. At some point down the road, I'll pull that out and that will all be tax free. So I've actually got 2 separate accounts with them.
Got it. So the reason why it's tax beneficial is based on the specific funds that you happen to be using. Got it. When did you write this book, The Wealth Highway?
Last year.
Got it. What gave you the idea to write a book? Because I was thinking about writing a book also, more of just, my history of, what I've been doing over the last 25 years, and maybe give it out by some networking events. What was your reason for putting together the book?
And my goal has always been to help people achieve financial independence. And I was talking to my chief marketing officer I hired last year, and he says, what's your goal? I'm like, to help as many people as possible. He said, Steve, you really don't do much in social media. You don't have a book. You can't help people if they don't know you exist. I'm like, yeah, good point. And he said, you should probably write a book so people can read that and maybe do some more podcasts and get the word out that and do some more social media so people know you actually exist. It's like, okay, that's fair. So kind of prompted me to finish the book and do that. So,
okay, before my next question, note to audience, please reach out to Steve so he knows he exists, please, and make his chief marketing officer happy. Talk to me about Unbroken Investing. That's not just a term, it's the name of your company.
Yeah, that's the name for a community. And so the way I look at it is the traditional method of investing is broken. If all you ever do is put money into stocks and wait, that's not going to help most people retire the way they think it's going to. And so we use different assets. It starts with, again, that evaluation, kind of where are you where do you need to go? All right. Where are you in your journey? Let's help you get to that next step. The main thing we do is we offer access to investment opportunities you can't find elsewhere. And some of them have just been amazing. We got some amazing results with those. But then also it's the community itself where you're talking with other investors, other accredited investors, and things like that that are on that journey, sharing ideas. We do a lot of due diligence together as a community, so that helps protect everybody. And we've got some education in there on different types of investments. But really, what attracts most people is the access to investments they just can't find elsewhere.
The audience that listens to this podcast are young, I would say people in their 20s who are you too. What do you, not necessarily high income, but just, making money, living life. What do you suggest that, their first step would be? They have zero knowledge of investing and they're making, I'll throw a number, $1,000 a week, and they only need, $850 to live, and they have $150 extra that they decided I'm not going to go out and spend on flashy clothes or a more expensive car lease. I want to put it away. What should they do with that 150 a month or a week or whatever it is?
Yeah. So I'm actually going to talk about the formula in the book that I talk about how you create wealth, because there's three parts to it. And so it's a multiplication formula. The first one is how much money you have to work with. So do I have $100 or $1,000 or $1 million? The second one is how much knowledge do you have about investing? Do you have, a scale of 1 to 10? Are you a 0? You a 2? You a 8? And so the more knowledge you have about investing, the more your money is going to be able to grow. And then the third one is the time that you put into it. So are you going to put in more time again, whether that's due diligence, whether that's networking, whatever that is, are you going to put more time and effort into it? The more time and effort you put into it, the faster your money is going to grow. And so it's those three things multiplied together. And here's what the difference that most people don't think about is it's not just you. So when it comes to capital, it's not just your capital. You can use other people's money, use leverage. It's not just your knowledge. You surround yourself with intelligent people who have knowledge about things that you might not know. And again, it's not just your time. You can use other resources to help you as well. And so I say that to say, if you're, again, in your 20s, you got an extra $150 a week, great. You need to gain some education. What do you want to do with your money? And again, that sort of thing. And so you need to gain some knowledge. And obviously, you need to keep growing that capital. To be honest, initially, those mutual funds are probably perfect. Set aside $150 a week into an equity funds for a while. Let that build up while you're gaining knowledge, while you're learning things, while you're networking and building trusted advisors around you, so that as you do have a little bit more money, okay, now you've hit a certain threshold. Okay, now I can do something a little bit bigger, take that next step. But I would start with just setting money aside in something. Index fund would be fine, but gaining that education along the way.
Unbroken Investing, this community, this is local, it's national, it's international, it's online. Do you have meetups, physical, Zoom? What do you got?
Okay, technically it's international. I think we've got one member in the UK, a couple in Mexico, and a couple in Canada, but it is mostly the US, and it's mostly coastal. Tons of, from Seattle down to San Diego and from New York down to Miami. There's a few people in Texas, the Midwest, Chicago, but it is certainly not a locally based operation. It is usually mostly the two coasts. With that said, we have live meetups or meetings every single week where, we either like Monday evening, we have an opportunity call. Every Monday at 8 p.m. Eastern, we introduce a new investment opportunity or a new strategy. And so we have those. We have a couple of what we call office hours. Just hop on and ask a question. Any question you have about investing, that's what we're there for. And so we have quite a few live calls, as well as the 24/7 online community where you can always ask questions. We are looking to schedule some more live face-to-face meetups. I absolutely love to travel. I travel all the time, any opportunity I get. And what I'm starting to do more and more of is when I go to a city, hey, I'm going to be in this city for a couple of days. Who wants to meet at this time at this location? And just kind of spontaneous meetups. And so I'm starting to do more and more of that. So there is some face-to-face aspect, but it is mostly community and mostly online community.
Is this community free to join?
It is not. It's not bad. It's $97 a month. But when you look at the investment opportunities, whether it's if you want to do private lending or borrowing, either one of those, access to real estate, just a variety of different things, it pays for itself pretty easily.
Yeah, $97 is a good entry point, and it also weeds out the non-serious people. So it's definitely a good number.
Yeah. And I tell
it's
people,
not 100. It's 97. Yeah. So I like that.
Right. And I tell people, there's no commitment. If you're in it for 1 month and you hate it, leave. We haven't had that happen, thank goodness. But it's no long-term commitment. But I think what you'll find is amazing. And again, we do. And so, just so you know, I'm going to share one other thing we don't do quite as often, but we will from time to time find just amazing startup opportunities. One of the better ones we got into late last summer, early fall at $2.30 a share, and it went public last week on the NASDAQ at 13. Last I saw it was at 17, but from 230 to 17 in 10 months, that's pretty good. But that's the type of things that we're always looking for. It wasn't a publicly available. It just, it's from networking. It's because I've met a lot of people over the years, and people know that, hey, Steve has a community of investors looking for unique opportunities. And for every 10 that we get, I turn down 9. But sometimes you just find some golden nuggets in there.
How did you start the community? Was it slow going? Did it happen organically because one person, 2 people, 3 people, and then it grew from there? Or did you have this vision, hey, I want to start a community. I need to get at least X amount of people in there to actually launch it. How'd you do that?
Great question. It actually started with real estate. So I'd been doing real estate for many, many years. And when I said, you know what, I need to branch into things more than just real estate, I did that personally myself for a couple of years. Then when I said, I need to create a community to share this information, to share these opportunities I'm getting, I went back to those real estate investors that I'd been working with and said, hey, I know you've invested primarily in real estate with me, but would you be interested in some other opportunities as well? And that kind of got the ball rolling. Then it's been mostly word of mouth. And then in the last few months or so, we started being a little bit more aggressive with some art marketing and advertising, but it's been mostly word of mouth.
Very cool. Steve, it was great having you here. Before I let you go, just tell our audience where they could reach you, any URLs, any emails, phone numbers, whatever you say, they'll put it in the show notes. And, this way our audience could still tell you that you exist.
Sure. Appreciate that. The easiest one is just talk.unbrokeninvesting.com. And that's the easy way you go in there, because I don't make my calendar available to everybody, but I do it for guests from podcasts such as this. So that way your listeners, if they want to reach out to me personally, I've got my LinkedIn information, Facebook, and my personal calendar on there if they want to schedule a call.
And your book is available?
It's on Amazon if you want, but it's called Wealth Highway. We also have a link to that on the webpage as well.
Okay, great. Steve Lawson, Unbroken Investing. Thank you very much. It was very interesting,
Thank you so much.
Very informative to talk to you. And I think that's a wrap. This has been another episode of the Wealth Clock podcast. And I am your host, Stephen Weinstock. And this episode is over. Steve, thank you very much.
Thank you very much.